The first question I have to ask, given that I'm sat outside the House of Commons this afternoon, is Brexit related. You've just got your banking licence. Are you worried that if we get a hard Brexit, a difficult Brexit, that the credit quality that you are currently seeing is going to deteriorate and that NPLs could potentially rise?
Yeah, so we've been lending to UK consumers now for 13 years, and we have lent through the great financial crisis, and we have kind of built up a good experience of understanding UK consumers. And yes, if we have a lot of disruption when it comes to potentially a no-deal Brexit, it can lead to consumers not being able to pay, losing jobs, not being able to stay up with their debt repayments, and that's why companies like us have taken a more cautious approach towards lending. In fact, over the last 2 to 3 years, we have been tightening credit and focusing on more people who are less vulnerable to economic volatility.
How bad could it be?
It really depends on what happens in Parliament today. I think we can think of many scenarios. I mean, one is some sort of a deal, a transition period, because the fundamentals of the UK economy today look very good. Unemployment rate is very low, while consumer debt is somewhat high. Actually, when you look at debt servicing ratios, they're at good levels. When we look at our own performance, consumers are still kind of paying back their debts, and credit quality is actually very, very good. So it will take a disruption. It will take a big disruption for it to be really bad. And thus, if we can avoid a no-deal Brexit, I do not expect that Brexit should create a huge problem. If it had to be a no-deal Brexit, then I think the sectors to really worry about would be the SME lending market, in particularly those that have exports, and people who have jobs in those SMEs would be the sectors that would be more worried about. For Zopa, we've kind of more focused on consumers, and we are focused on consumers who typically have had stable long-term jobs. And thus, we feel the impact on us will be muted, but will be there because we are a part of the UK economy.
And let me just explain to our US viewers in particular that you are a peer-to-peer lending platform, so consumers will borrow between £1,000 and say £25,000 for small things, home improvements, weddings and so on, and then all of that is securitized on European markets. So Jaidev, explain to us what you're seeing in terms of the profile of the borrower now. Are you seeing as much borrowing, more borrowing? Is there less confidence and so maybe less borrowing?
Yeah, so if you look at our business, we've been focusing on borrowers who've had good credit quality, who have actually managed credit responsibly, typically have incomes about 50% more than the UK average, and more than about 60% are homeowners. And these loans, as you correctly stated, are actually funded by either individuals, actually UK individuals who have lent through a platform, as well as some institutional lenders who have in turn securitized some of them in the UK market, So we have a diversity of funding sources. When we look at the borrower credit quality or actually appetite, we do not see a huge reduction in that. And I think part of the reason we are actually better placed in the market is that increasingly consumers are understanding that there are more options other than their banks to go and borrow. And when they do that, when they go on to digital open market platforms, like price comparison sites, then we are the #1 lender there. Thus, we're increasingly actually getting a better quality of credit as more and more consumers look digital.
What about
so for us, the impact hasn't been that big, but as you can see overall, the growth in the lending market has slowed down from about 10% last year to probably more like 5% now.
And briefly, what about the profile of the lender who lends to Zopa customers, if you like? Obviously, if home prices are going down, particularly in London, that would make the potential borrower a little bit more iffy in the eyes of lenders. Are they still willing to lend as much as they ever were?
So when we look at the demand for borrowers, we as a platform, we continue to grow, and thus we continue to see good appetite from both individuals and institutional lenders. We are seeing that particularly lenders wanting to enter the UK market, new lenders, are probably waiting for Brexit to resolve one way or the other before making a decision. But from existing lenders and kind of existing UK investors, we continue to see increased demand.